You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from a little thing we like to call around these parts, the Options Insider Radio Network. No shortage of ways for you guys to sample our fine wares here on the old network, including from our website, theoptionsinsider.com. Click on the Insider Radio Network tab, and bam, all 13 programs will pop up for your ease of use, your convenience. Of course, while you're there, click on some stories, some articles, read some educational articles, perhaps some breaking news on the options market. A whole raft of unusual activity there for you to enjoy, much more than we have on the program here today. And, of course, a bunch of other stuff, analysis, what's going on in the options market, some futures stuff, some tech stuff, all sorts of stuff going on over there at the mothership. Check it out if you haven't been over there in a while. Surf on over. I think you're going to like what you're going to find. Of course, you can also find the radio, iTunes, TuneIn, Stitcher, pretty much wherever you find podcasts, including via our mobile app available for iOS, Android, and indeed the Fire OS. And joining me on the old OB program today, starting off with the man beaming in from that paradise on earth known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old Option Block program, sir.
If heaven ain't a lot like St. Charles, I don't know if I want to go. Just kidding, of course. That's a line stolen from Hank Williams Jr.
Well, always steal from the best, I say.
There you go.
All right, and also joining us from another scenic area of the world where they do a lot of shopping at LL Bean and they hang out with some former Republican presidents and perhaps grab some scenic lobsters. It is the Rock Lobster himself, Mr. Andrew Giovinazzi, from myriad appearances on our network, including his daily dose over there on the TD platform with the Options Oddities program, and occasionally here on the old Option Block program, as well as some pit stops, like that pun intended over there at the old Option Pit. Mr. Rock Lobster, welcome back to the program, sir. How are things in sunny and scenic Maine?
Lovely. You are puns aplenty today.
I'm all over it. I think it must have been what I had for lunch. It's just making me punny.
Right, it's living in Chicago with all those good restaurants around.
All those good restaurants, all that great summer weather, a balmy like 62 here on July 9th. So.
Oh, really?
There you go. Somewhere in Chicago. You just can't beat it. And before I get too deep into puns and Chicago weather, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's lighting up the old tape. We are recording this today on Thursday, July 9th, for all of you playing the home game, where it is indeed a balmy 60-some-odd degrees here in Chicago. Always love when you got to wear a jacket in the summer in July in Chicago. And we're coming off the heels of yet another rally ho mode on the old street, though perhaps not as much as we were leaning intraday. We started off with pretty much just rally home mode in the S&P and everything else. The S&P got as high, I believe, as about 20 odd handles higher from its almost 25 handles on the day, and then gave up a lot of that towards the end of the day, closing up about 5 or so handles on the day. Actually closing up about 9 total on the day here. So a decent rally here today on the street, not as much as we had seen intraday, but still keeping some of that love alive. Of course, we are recording this, like I said, on Thursday, the day after that enormous outage over there at NYSE, shut down NYSE for the better part of nearly 4 hours, which is pretty much unheard of in this day and age. It is kind of ironic, though, after having spent the better part of the last year hammering on fragmentation and on HFT and all these other things out there, that we did see the one bright spot of this crazily fragmented marketplace that we live in, and that there are myriad other venues to pick up the slack when a big venue like NYSE does go down. In fact, if you look at a lot of charts and graphs of equity volume, this is primarily centered on the equities, obviously. Equity volume really didn't miss much of a beat. Dark pools do a lot of that volume anyway on any given day, so they were, of course, still up and running. And a lot of the other exchanges were able to route and pick up. A lot of the other venues were able to route and pick up a lot of that volume. So you really didn't miss that much from an overall execution perspective. You even were able to get a print off in the index, despite the fact that it didn't really trade for the lion's share of the day. So interesting stuff, perhaps showing that, for all the problems that come from the legions of venues, we obviously have this problem in spades in the options market as well. There are some benefits to it, and we do see that on days like yesterday when the market was pretty much shut down in one of the primary trading venues. And yet life still managed to go on, and trading still managed to get done for the most part anyway. So maybe we'll start with you, Mr. Rock Lobster. Why don't you start off with what your tales were like from yesterday's big outage day, if anything, and then what caught your eye in today's activity?
Today's activity, I think the story was kind of the turnaround. The market was opened up pretty big, over 1% or something. And kind of slowly gave it all back because, there's no deal in Greece, China, who knows, blah, 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 blah. There's a lot of questions still.
There's all those pent up buy orders from yesterday hitting the tape today. Just drove us up at the open.
Yeah, and you have the market up, volatility up too into the close. So, VIX is near 20, 1992 close, it says. But I think the market, they are still looking for some movement. It is hard to believe, but actually it's not hard to believe, but they're definitely, the market is poised to do something. It's easy to see how easy it flies when it wants to. So that's what we're sitting on. We're sitting on kind of like the big binary event, I think. So we're either going to be up a lot or down a lot, and whatever it is going to be large.
Yeah, VIX Cash flirting with that important psychological 20 level yesterday, getting as high as about 19 in the orders or so. So even on a shutdown day, when the world's kind of going crazy, what's happening? Is it a cyber attack? It was kind of a crazy day. United Airlines also went down with some cyber glitches. A bunch of venues actually went down. It seemed like there might have been a concerted cyber attack at work, so a lot of people were kind of concerned about that. And even with all that preying on the markets, VIX Cash still didn't break 20. So take from that what you will. Kind of interesting. All those people, Andrew, who've been loading up on VIX mid-20s and higher calls over the past month, particularly in July, they're probably a little bit disappointed by the decent pop, but not perhaps the pop. Certainly the guys who are loading up on 23s and 26s and higher certainly were expecting a little more bang for their buck, given what we've been seeing, but certainly not materializing. But VIX Cash still trading on the slightly elevated side, up there, of course, in the high teens, hovering around 1930 as we discuss here on the old program. Uncle Mike, a lot to discuss both yesterday and today. Of course, your beloved fruit company also taking it on the chin. The post-Tusaw era, not exactly been friendly for the big fruit company. I think once they heard Tusaw was out, everyone and their mother scrambling for the exits. The stock off nearly 2% again today, after taking on the chin again yesterday as well. So not the best time to be long some AAPL, but interesting stuff nonetheless. So a lot for you to chew on as well. Uncle Mike, what caught your eye both in yesterday's halt activity and then today's kind of bit of fluctuation activity we have going on here?
Well, I think yesterday's halt activity just shows how the fact that we don't we're in a pretty good spot overall in the markets in that we really didn't miss a beat. It really didn't have any effect on anything that I did yesterday, and I'm guessing most traders out there in our listening audience would say the same thing. So it's not good to have a glitch like that, and it was concerning the fact that the Wall Street Journal's website goes down, United Airlines goes down, and the NYSE goes down with what they had. But in all honesty, it really didn't seem like a big deal. The conspiracy theorists will always think, and there are some conspiracy bones in my body, of course, in terms of them saying, oh, this was nothing, no big deal. It does make you scratch your head a little bit, but the reality of it is that life's gone on, and it's not a huge thing. What's catching my eye right now is a lot of things. The headlines are saying at this point that we're supposed to have some type of a proposal from Greece within the next hour or so. That's something that could be a potential market mover. The other thing that's going on is that it looks like they might talk past the deadline in Iran on the nuclear deal. So that's something that could affect oil and markets in general, of course. I think the exact quote was that they're not necessarily going to be confined to a specific deadline, but they're not going to sit there forever. And then, of course, I think the main thing or the main concern to me for this market in general is China. They're continuing to do everything that they can to ban stocks from going down. I remember when back in 2008, we had to do a few things like that. And it didn't really turn out like they had expected, but I think they banned short sales on Bank of America. I forget what else they did, but they did a few other things that really screwed a lot of things up along the way. And China's doing a lot of those same things right now that definitely makes you scratch your head. So I'm in caution mode at this point in time. We're negative on the year in the market, and this is my trading rule. Whenever we go negative on the year, I'll get out of my long call, and I have some an out of the money. Like today, I opened up a smaller position on the 202-198 put spread. But for right now, I'm out of my calls until we go positive, or I have reason to get back into them. I have my downside levels with which I would get in and buying a dip. But for this point in time, I'm in caution mode. For my hedged SPY clients and the hedged strategic night clients, still long the put, not getting out of it, but we're pretty tightly hedged at this stage. And I would urge people to be cautious at this point. I know I talk a lot on the show about how I'm long-term bullish, short-term cautious. Now is a time to be cautious, folks.
Speaking of caution, going back to your beloved fruit company, we've been talking a lot about technicals here on the show of late, which is kind of a bit of an aberration for us. I've seen a lot of people going on about technical levels in Apple of late. Of course, like I mentioned, Apple selling off a full 2% today after taking on the chin recently this week as well. Some people writing up this week. Again, I'm not a technical analyst, but Uncle Mike, you're the closest thing we have here on the show. So, of course, it's in your favorite name. So tell me what you think of this analysis here. We had people talking yesterday, of course, about the symbolic 122.57 level. It was down about 2.5% at that point. This isn't from yesterday's session. That was below both its May and June lows, which, of course, doesn't bear well. A bit of a bearish sign there. And then, of course, a lot of people saying there was going to be some support today at 121.65 to the downside. We closed at about 120 even, so we broke through that support. So much for that. Pretty substantially through that support. And now a lot of people out there saying it's going to really retest the 200-day moving average to the downside, which is about a little bit shy of 119, 118.60 at that point. And if it hits that, that would be the first time. If it does that, it'd be the first time it's pierced its long-term moving average since the third quarter of 2013. Again, not exactly bearish momentum. They're saying if it gets down there, then all these technical guys are saying, particularly in that 117 range or so, then it's a clear warning sign. Look out below. The sky is falling, et cetera, et cetera. Uncle Mike, as our both Apple fanboy, or at least former Apple fanboy, and resident technician, what say you to all these perhaps bearish chart signals out there in Apple?
Yeah, man, we're stretching there. This reminds me of a time when I worked at Options Express when we wanted to have a team of analysts. We were a really small company at the time, and we wanted to go big time. So we had everyone around in the education team was going to be an analyst of something. And so me being the youngest guy there, they said, so you want to do fixed income? I'm like, sure, what the heck? So that made me the fixed income analyst. And so when people would call me, I'd get to talk about fixed income and that type of thing. So I guess this is now my new role in my new life is the resident technical analyst on the option block. But I think with Apple in general, it's still overbought. It's had its run, it's had its day, and I think that it's time to either just start trimming the positions, maybe hold on to it a little bit because you like to hold on to the stock for the long term. But I think it's had its day, and I think it's gonna. I don't know if it's going to go super low. Like, I'm not calling for Apple to go down to 80 or 90 or anything like that, but I think the momentum is definitely to the downside. If we do pierce this 200-day moving average, we could see more downside in Apple for sure. But I don't think it's necessarily the technical reason as to why it's going to go down. I think it's going to go down just because they're going to have to come up with something new and innovative to make it go up. And I don't think what they have coming out at this stage is neither new nor innovative. When they get something new and innovative, throw the technicals out the window. If they have the next iPad, the next iPhone, whatever the case may be, Apple's going up. 200-day or no 200-day, it's going to come up. But until we get that, I don't think it's going to come up. So that's my thought on the fruit.
The old fruit. Lots of thoughts to be had on the fruit. We'll, of course, move. I probably do a whole show. Still, even in this late game here, so many Apple devotees out there, including amongst our listening audience. But we have to move on to another crazy name that catches a lot of attention these days. Of course, Alibaba went public almost a year ago to a lot of fanfare, a lot of Sturm und Drang in the aftermath of that. What's going on, the turmoil with their CEO, et cetera, et cetera. The stock not exactly lighting it up over the past year after hitting a high, I believe, around the 120 level or close to it. Pretty much been in downward mode ever since closing today, right around 79 even. And yesterday we saw someone putting a decent amount of money to work. It's like about $1.80 on the buying 12,000 of the SEP 50 puts. So essentially saying the stock's going to sell off another 30 handles. I'm not paying a lot for those, as you might imagine, only about 15 cents. Still works out to $180,000. Not big for some Wall Street desk, but for in terms of expenditures, not insubstantial either. That's a few nice cars at least thrown in there. Maybe a cheap house if you want to mix it up that way. But still, interesting stuff. Mr. Rocklaps, you've been watching Baba at all, and what's your take on our friend here? This is kind of a bit of an odd block teaser before we get into the meat of the unusual activity, but someone just loading up on some pretty much, I guess what you can technically term garbage puts out here in Baba.
Yeah, you know what, though? When you look at the Chinese market and look at how far it's fallen, it's just so confusing over there because they have they've done so many things to sort of manipulate the market prior to this. They're kind of, they're sort of consuming the seeds of their own demise on it. But Baba, for the most part, it was holding up pretty well. It was dropping with the rest of the Chinese stocks, but we saw this in Twitter when the lockup came off, and there was a big seller. I don't know if we're going to get the same action, but if somebody's long a lot of stock or they're expecting to have a lot of stock come off, maybe they just want to make sure they can guarantee their exit on, 1.2 million shares, which is at $80 is a pretty good amount of money. They're like, no matter what, I'm going to get out. I'm going to take my chunk of stock and be done. So it is very reasonable to assume that that's what they're trying to do. Just guarantee a spot.
That's true. That is around when I believe when the lockup expires, about a year from the IPO. I forgot when the exact IPO date is, but it's around that time frame. So our friend there, you're right, guaranteeing him at least an exit somewhere on that level. And $1.80 if you're sitting on that many shares of Baba. It's a pittance, a relative pittance. Speaking of getting out of some shares, before we move on into the odd block here, looking at some other numbers, all you guys out there look at different indicators. Of course, short interest, a big one with a lot of people out there. And if you're watching that, then you are perhaps a wee bit concerned. Short sales right now at their highest level since the 2008 financial crisis. We saw the numbers here in June. The number of shorted shares increased 3.3% from a month ago to 16.2 billion shares shorted in June. That is the most since September of 2008. Of course, we all know what happened in that time frame in 2008. So here we are, bearish indicators on Apple. Now VIX spiking, but perhaps not to the ultimate level some people thought. And then, of course, short interest just hitting it out of the park. Perhaps time for the diehard bull in you, Uncle Mike. Is it this enough to, you said you're already cautious, you're in kind of cautious mode. Are all these indicators kind of conspiring on you to perhaps be even more cautious?
No, not more cautious. Just being negative on the year is my indicator. If we're positive, then I think the market can go up. But when you got to have some type of risk management in place somewhere. And the caution flag is waved by me once we go negative on the year. There is something to be said for buying the dip. And we'll be at a SPY peaked at 213.78 a few weeks ago, and we'll be at a 5% pullback when we're around the 203 level, and then probably in the low 190s we'll be at a 10% pullback. So those are the two levels with which I would look to get back in or become less cautious. But once again, when you're negative on the year, you got to be cautious because as the old saying goes, by all you veteran floor traders, the market takes the escalator up, but the elevator down.
Yes, many, many euphemisms from the floor for downward moving markets. We shan't get into those because we'll be here for quite a while. Instead, we'll get right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we break down weird, wild, sometimes just whimsical paper that is lighting up the old options market today. Going to kick things off amongst this kind of weird day on the market as well with some weird paper coming in, starting off with a name we haven't talked about in quite some time. This is CBS Corp, ticker symbol, appropriately enough, CBS. Closing today, pretty much unched on the day at right about 54 and a quarter or so. This is the name that averages about 8,600 contracts a day, doing roughly that today. So not an overall volume surge that caught our eye as much as a surge on one particular strike. In this case, it was a little bit longer term paper that caught our eye. In particular was the Jan 2016 double calls, aka the 55 calls going up. Looks like paper buy-in for $3.70 when we started profiling it. 3,600 times, a total of 4,400 went up on the day. This is pretty near term, not near term, but near to the money paper. Like I said, only about 75 cents out of the money on these calls. So a little bit closer to home than we see typically with some of these trades. If it is indeed a straight up buy, usually they give themselves a little bit more wiggle room on the upside, and also they save themselves some premium to boot. This friend playing close to the fire, of course, when you combine that with the 9,600 contracts worth of open interest sitting there on this strike, this tends to make you think that this is probably someone coming in and perhaps closing out a short. We are getting perilously close to that strike where he's short, and our friend perhaps we'll know for sure tomorrow, but perhaps deciding discretion is indeed the better part of valor, closing out at least half of the open interest or close to it, and that is indeed the case. He might have some more to come tomorrow. A few strikes out there with some size open interest, the Jan 2016 60s, and then 17,000 of the Jan 2016 65 calls. So some size strikes out there in CBS, maybe worthy of paying some more attention to, perhaps some funky ratio spreads on out there. Either way, some interesting paper going up longer term in CBS. Mr. Rock Lobster, what say you about these long-term call buys out here in the Tiffany network?
It was tough to figure out. I want to see where the open interest change is, but it's come off a lot from highs. I think there was a lot of broadcaster content speculation on broadcasters buying, other networks and things like that. So I just think from that point of view, somebody's either covering a short or they're saying, you know what, it's time to nibble back on CBS, but they're, and I saw some call buying today. A lot of it was a little bit longer in term in nature, trying to get around the, you got a lot of, as Mike was saying today, you got a lot of caution, red flags and stuff going on with all this right now.
Yeah, this guy is indeed covering a short, and I kind of agree. It looks like he is. Then he picked a decent time to do it. These things were pretty sizably in his face not that long ago. The stock was trading 64 just a month or so ago, so he was nearly 10 handles to the bad side with these calls if he did indeed have them on then. So I'm not sure when he established this position. Probably a little while ago, though, if it's Jan 2016. So if he did indeed write those, that was an interesting strike to choose. If he did do it at that time, then hey, he's actually probably sitting pretty on these guys. He's buying them back at the right time. But still, an interesting strike. That's why I kind of agree with you. I want to see the open interest on these to know for certain, because we don't see a lot of either opening buys or indeed closes. Closes makes more sense when you get this close to the money. That's usually someone scrambling to cover a short, or in this case, picking an opportune time to do just that. So stay tuned to CBS, listeners. Maybe we'll see what's afoot out there, as well as with some of that other interesting paper perhaps lurking in some of those far off strikes. As we move on to our next name, I do believe this is a newcomer here on the old Odd Block. We've talked about WisdomTree before, but not the WisdomTree EuropeHedged Equity Fund, the ticker symbol HEDJ. I like it, HEDJ. Closing today, $60.91, up $1.41, or about 2.5% on the day. This is the name that does about 7,400 contracts, so pretty decent paper for an Odd Block victim / candidate, doing nearly 21,000, nearly 3x today. So just very robust volume out here in WisdomTree. Everyone and their mother wanted to get themselves some WisdomTree calls, outnumber, and puts out here, nearly 2.5 to 1. That should tell you where the lion's share of the action was today. And in particular, we drilled down on one sizable call trade, even though there was a lot of call love out here pretty much across the board. But what caught our eye was some closer to home paper, in particular the weekly expiring tomorrow. So these are now essentially dailies. The July weeklies, 62 calls going up for prices between 30 and 35 cents, 5,000 times. This is opening paper because there's no open interest here to speak of. Also saw some 60 half puts going up about 1,700 times on about 1,700 contracts open interest. I don't have the prices on those as much, but perhaps a little bit of financing there to go. But 1,700 of those is not going to go a long way to financing 5,000 of these 35-cent calls. Went up in 2 blocks on the Philly. This is pretty sizable stuff, particularly for some paper that is... Shall we say, pretty close to the fire. 1 day to go. So 30 cents, a strike that is over $1 out of the money. I know it was in rally ho mode today, but it didn't get close to 62. It got up to about 61.37 or so. So still a good 60 odd cents away from that strike. And our friend needs it to blow through that strike to the tune of 30 cents. For these trades to start making some money, and he needs it to happen pretty darn quick. What say you, Mr. Rock Lobster? The near-term nature of this, you think perhaps this is someone whose size short and for whatever reason is scared to death going into tomorrow, or what's your take here on our friend really throwing a lot of money out for a one-day flyer here? These things are already 15 to 20 cents in his face, depending on how you look at these.
I think it's a big bet on the Eurozone, on, somebody coming to the table with a deal tonight. We're going to know in a half hour, 90 minutes. And, even all the aftermarket, the vol futures are all bid higher. And it's either, I think from where this product, where these European markets came from, there's a huge bounce today on, euphoria on a deal. And you could see 62, you could see 63 tomorrow easily, 63 and a half. there would be huge euphoria on the upside for this. So all I can say is that, that would take one piece of the puzzle out. I think that's what, somebody's just making a cheap bet. And if it doesn't happen this week, they've got some calls bid for next week. So
yes, there's always next week, of course. You'll be leaving some blood stains on the table after this week. That's about $1.60 or so they dropped on these calls, depending on where they got the majority of those calls off. They're already off about 100,000 or so of that $1.60 right now, so they're kind of wearing it. They need this thing to really rally ho. But again, probably a size fund, so a bit of a flying speck out here, or indeed perhaps a catastrophe hedge against a short position that could go in their face tomorrow. If the worst, for their perspective at least, comes to pass out there in hedge. Either way, an interesting one. Certainly they need some more momentum out there for this trade to start looking pretty tomorrow. But again, perhaps we'll know probably not by the end of the show, but hopefully pretty soon whether or not this trade was genius, brilliant, or just sheer madness, leaning toward the latter right now. As we dive into our final name, this one's been kind of off and on the odd block over the past year or so. This is one of our favorite, everyone's favorite kind of retail slow death knells, I guess, whatever you can call it. This is JCPenney, ticker symbol JCP, trading south of the 10 handle these days, trading about 886 right now, off nearly 2% again today. So bucking the market trend and turning to the dark side. This one does about 22,000 contracts a day, doing a little over 30,000 today. And like we said, it hasn't really been a story of victory out there for much of JCPenney, even though it kind of has stemmed some of the bleeding, at least from the stock perspective over the past 6 months or so. It's kind of been vacillating in this 07 to roughly 9 or so range. So it's kind of been, at least it hasn't been plumbing the depths for the better part of that. So that at least I suppose is something, as opposed to its downward momentum it had prior to that, when it seems like no one could really turn the ship around over there. They even brought in the Apple retail genius, and even he couldn't make heads or tails of what was going on over there at JCPenney. But that's neither here nor there as we look at what's cooking from an options perspective today. And what kicked us off was the old out spread, not the up and out, just pretty much the old out spread. In particular was the roll from the weekly July 9 calls expiring tomorrow out to the July 9 calls that are just the old regular July calls, to the tune of, when we started profiling this, about 7,500 times for 12 cents. It's like selling out the near-term July, as you might expect, and then buying it on the July side, as the farther July side, as the day went on. Seemed to have done it on a bit of a ratio, closing out 17,000 of the weekly or daily at this point July 9 calls, and only buying about 8,200 of the regular July 9 calls. So some sizable open interest on the strike, about 20,000 on the one dayers, and about nearly 18,000 on the July 9. So there are some funky ratios out there. Perhaps our friend deciding, taking a little bit of a hit on the previous kind, deciding perhaps to reestablish with about half the size and try his luck that way. Again, also some open interest. Maybe he did some earlier as well. Either way, the old straight out, our friend here still thinking perhaps glory days are ahead here for JCPenney, and not something in the distant future, but something coming, perhaps a dramatic turnaround for JCPenney in the next few weeks here. Mr. Rock Lobster, take us home here with our friend keeping the love alive for JCPenney.
Keeping the love alive. Yeah, it looks like they want to just stay in the spread, or stay in JCPenney, roll out of July, and they're only buying another week. So I'm not quite so sure, what they want, but that's what they want. So, who am I to argue with any of that stuff? It just looks, again, like I think there's some players that were looking for a bounce in the market after the Greek thing. China, I think, caught everybody's surprise, so they're just rolling out to next week to see if they can get it.
We are the ones to argue, sir. That is our job. We are the ones to argue here. That is our job. No, I'm just kidding. But yeah, looking at this paper, I'm kind of hard pressed to see the argument why he needs to get in right away for this pop to 9. You know, it hasn't really hit 9 since early April or so. So we're several months past that now. It's been vacillating, like I said, kind of in that 8.5 range. Our friend saying it's going to happen next week for sure. Maybe he's one of those guys, and if it doesn't happen next week, it's definitely going to happen the week after that, and keep rolling and rolling. We've all seen those guys at the Vegas tables not doing so well. Perhaps our friend here is one of those, or perhaps he thinks he knows something about JCPenney. The time will tell, as they say. Not too much time in this case, so we can keep an eye on these 8,000 or so contracts out here in JCPenney and see how they stack up for our friend. Meanwhile, speaking of friends, it's time for you guys to join us on the program because it's time to dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the program where you guys get to join us on the old All-Star panel. No shortage of ways for you guys to do just that. Hit us up on the website, theoptionsinsider.com. Of course, you can use the contact form there or post a comment, whatever you prefer to do. A lot of you guys like the comment form, or the contact form, but whatever you like. Of course, questions at theoptionsinsider.com also works. Just put question for the option block somewhere in there so we know what the heck you're talking about. And then, of course, twitter.com/options and facebook.com/theoptionsinsider. So if you have your question is more of a treatise, then perhaps the email, maybe the contact form. If you're more in the 140 characters range, then hit us up on social media. Of course, you can find most of that via the mobile app as well, at least for the iOS version. Working on getting that for the Android as well. Meanwhile, I'm going to kick things off with a question from a listener. I don't have the name, so I'm just going to go by their easy-to-say handle of N198UA. And he or she, I'm assuming he, writes, "Hey, I'm a big fan of all your radio shows, especially Options Oddities." Well, there you go, Andrew. You have a fan. So that's one.
I got a fan.
Yeah, you got a fan. So now you can say to your mom, "Hey, Mom, I have a fan." He goes on to say, "Hey, I've always had an interest in unusual activity and even attended your forum in Chicago a couple of years ago." Well, I already like this guy. He's got good taste, clearly. If you're not familiar with what he's talking about, listeners, we had a big unusual activity forum in Chicago a year and a half or so. Maybe it was 2 years ago. Wow, it seems time flies. It was one of the first really of its kind. We kind of dove into a lot of stuff we do on the odd block, really, in a lot more detail. Talked about some studies that show the efficacy or perhaps lack thereof of unusual options activity, depending on the frame of reference and what you're looking at from the underlying perspective. We also broke down how you could use it, some mistakes people make. It was really cool stuff. Really great response. People flew in from all over the country to come to that thing. It was really surprising to see the level of interest in that, which was great. So we're maybe we'll do it again. I don't know. It was so fun. It was a lot of work to get it all arranged, get all the guests to fly in and everything, but it was a fun time at the end of the day. Let us know if you'd like to see us do something like that again, because it's kind of interesting, kind of intriguing. If I can get some time in my schedule to plan yet another thing, then perhaps another forum it will be. Meanwhile, he goes on to write, "Hey, I've always, my question, if a retail trader makes an options trade based on unusual activity that is later deemed, quote, insider," and he puts in parentheses, "or something that's not legal, could the retail trader and anyone who copied the, quote, insider trade be in trouble? What are the possible outcomes?" And this is a great question. You know, we've talked so many times on this network and other shows on the network about unusual activity, profiling trades you guys might want to piggyback on or perhaps trade against, whatever the case may be. But we never get into the ramifications. And, you know, it's an interesting idea. At the end of the day, though, how it breaks down, obviously this is the part where we put the disclaimer on, none of us are attorneys, so this is not legally binding advice that we're giving. But that said, all the stuff we're talking about really is public information. This is trade data that is publicly accessible. That's what we're going off of. So the intention of the person is what we're trying to surmise. We're trying to determine if they indeed had, quote unquote, material non-public information that they were trading on. That's what we're attempting to divine with our divining rod of unusual activity here. Sometimes it works, sometimes not so much. But that's what we're trying to determine. But us being able to do that is predicated on this material public information or potentially material public information, which is indeed the trade data. So that's a long way of saying I'm trying to think of, when I saw your question initially, what if any scenario that could result in someone who sees that and then trades on it somehow getting in trouble. And I'm kind of hard pressed for any scenario I can see that could really happen, unless you were so quick with your analysis and you were so quick to execute your trade, and the initial trade was something a little bit smaller, and we've seen these before, a couple hundred contracts that are pretty clearly dubious. If you see one of those go up and maybe you're so fast of analysis, whatever the case may be, and you 200 share, someone buys 200 calls in XYZ, and then you come in and buy 50 or 100 yourself, a few minutes later because you're so gung-ho, maybe somehow that could all get conflated in to the original trade, and maybe they could, even though it's separate, clearly a separate account, different brokers probably, they could easily sort that out, but maybe it might get flagged. That's the only time I can think of that. And even still, you'd have a great defense that, hey, this is public information. I saw this go up and I traded on it accordingly. So I can't see any way, even in that scenario, they may try to freeze you. They may try to investigate you, but you would have a clear and demonstrable defense, I should say. So I can't imagine anything coming of that. And that's really the 0.01% scenario. That's not really not going to happen. So I think long story short, you're pretty safe, particularly if you're talking on a show like this. If we talk about it in the odd block, you're free and clear, because that's clearly public at that point. So you can always point to our show as defense if you need it. Mr. Rock Lobster, I'll turn to you now. Can you think of any scenarios where someone may be acting on this stuff and somehow winds up getting themselves in trouble? Because I'm kind of hard pressed to think of any.
I think you covered everything. I mean, the whole idea is material non-public information, and you're making your trade based on an option that you see printing. So that's pretty public information. You're like, hey, somebody bought 50 of those. So I'm going to buy 50 of them. What the? I don't know. Alex would have to answer that, but I don't think there's an issue with it at all.
Yeah, that's when we need the viceroy for some weird minutia law from 1976.
Right, because it's timestamped, right? The size inside guy is going to be buying it timestamped before you did. So,
yeah, I mean,
they might knock on your door and say, "How are you so smart? Because you bought these 5 hours later." And you're like, "Well, because I looked at time and sales, and wow, that looked good, so I bought them."
Because I went to the optionsinsider.com and they wrote about it, or listened to the option block. A little bit longer time lag for the option block.
Your door might not get knocked on, but the timestamp will save you.
Yes, there you go. So if you can't rely on us, if we didn't talk about it on the site or on the show, then by all means, turn to the timestamp. Time and sales being your best friend in that scenario. All right, moving on. See if we can squeeze in a few more here. Great question there, though, from N198UA. Another question here. Everyone's on hard to borrow these days. This comes from 99999, I think. I'm not sure what that handle is. Either way, he or she writes, brokers typically charge more to short stocks that are hard to borrow. What are examples of the extra fees or commissions that you pay when you trade options in hard to borrow stocks? Uncle Mike, I feel bad. You've been a little bit quiet on the show of late. Haven't had many opportunities to chime in, so I will give you pride of place on this one. Please educate our friend here on where those hidden fees and costs are actually found when it comes to options and how they may or may not want to take advantage of those or perhaps avoid them.
Well, in terms of the fees for shorting stocks, there's a stock, I believe it was GoPro, a couple months ago, actually. And I had a client, this wasn't in the account that I trade, but client with the account he was trading, he did a calendar spread on GoPro, and it was a call spread, and he ended up getting assigned early on one of the calls, so he was short GoPro. I'm pretty sure it was GoPro. It was one of the a very high flying stock, so to speak, and so he was doing like a 40 or a 50 lot, and normally that's not something that the actual risk would really scare someone, but the fact that he got assigned early, he had a whole lot of short stock there that he did not want. Now, he immediately did the right thing. He had the long call, so in theory, he was protected in case there was a major rally to the upside, but because he was short that stock, even though he only had the short calls in the account, because of the fact that it was a 40, let's just say it was a 40 lot, all of a sudden he's short 4,000 shares, and he was quite quite a bit in debt because of the money with which he had to pay to short the stock. It came out to the point to where it was just supposed to be maybe $1,000 trade, approximately $1,000 worth of risk when you add up the spread. But because of the fact that he got assigned, he was assigned and actually short the stock for a 24-hour period, he ended up having to pay approximately $4,000 to be short the stock. This is one to where I did everything that I could for him. Contacted the broker. I looked up what the actual short stock rates were. I remember I had Alex come in, help me out to see if there was anything we could do to help him, but there was really nothing to do along those lines because of the fact that it was a hard to borrow stock, and the borrowing rates were just so insanely high on it. So when looking for shorting a stock or trying to take advantage of it, that is a very real cost when doing so, and you need to be aware of it.
Indeed. And of course, at the end of the day, when you're talking options, obviously there's fees with the stocks. They're going to charge you. The short interest is going to go higher if it's a hard to borrow kind of thing. It's pretty straightforward. From the options, there's nothing that I've seen that any sort of, hard to borrow extra per contract fee that they tack on. But as we've said many times here on this show, you see that inherently priced into the prices of those options because market makers can't give you liquidity that they can't get themselves. And if it's one-sided paper flow, like a lot of these hard to borrow names are, guess what? People are turning to the options to buy puts to get short. They can't just magically manufacture liquidity in the options that isn't there in the stock. So that's going to be reflected in the prices of those options, particularly in that case in the puts where all the action is. So you're going to be paying an inflated premium to do that. So there's no discrete fee you're being charged extra, but you will be paying more if you are indeed trying to come in and buy puts on this name and somehow magically get short and manufacture some liquidity where none exists really in the stock. Mr. Rocklash, anything to add here about the hidden costs of trading in hard to borrow options?
I could probably talk about this for hours. It's actually a good idea for a webinar from Option Pit. But the reality is there are ways you can tell if you're going to be assigned. There's lots of understanding how cost of carry works and how reversal conversion works and all that stuff. So you can understand, how and when or what's a likely assignment. As far as selling premium goes, it is almost to me like the opposite. Like everybody's shorting a stock, but it seems when there's heavy short interest in it, the stocks tend to blow up. So one thing I say about selling premium in them is be careful. There's a lot of potential, there's a lot of potential mess there. And, if you could give yourself, you could be in quite a bit of trouble if you do that. So, the other thing about selling premium in a hard to borrow stock, I would say, you need to educate yourself pretty seriously. It's much more than I could talk about in this setting before you start doing it. And as Mike said, you can end up with what you think is a relatively low-risk trade can end up being a $4,000 dinger. So all I can say is educate yourself, let's just say severely.
There you go. You got an idea for a webinar out of the show. So hopefully you'll give our friend, whatever his or her name is, a free admission for setting that up for you. Great questions. Of course, it is attractive to try to blast out these puts and some of these hard to borrow names because they are so juicy, so pricey. Everyone, their mother was writing in a week or two ago with some short strategies, some short premium strategies on Fitbit because that was looking pretty attractive when the options first listed and the puts are kind of juicy. And of course, they all look like rock stars now because the stock is about 8 to 10 handles north of where it was then. So of course, it quite frequently is also the other side of the coin where it's below that strike you're selling and the trade that looked so attractive. There was a reason that premium was so elevated. So as they say here, be prepared, as they say in The Lion King. We'll move on really quick. We got one last quick question here. I think we have time for one more. We got Jose A writing in, hey, any quirks with interest rate options that show the Fed might act soon? No real interesting data on the options that I saw there, Mr. Jose A, but the futures are always a good indicator of that. And of course, the Fed fund futures are where we typically look for this kind of thing. And of course, we had the release of data from the Fed this Wednesday, and that kind of cut the probability. Most people are looking at Dece. Dece seems to be the time frame everyone's kind of focused on. Most people have kind of already given up even on September at this point. The probability from the futures, backing into the probability from the pricing of the futures was just a hair under 60% toward going into the meeting post announcement, I should say. It's about 54% right now for a Dece change. So about a roughly flipping a coin towards the end of the year here for a increase in rates by December. The SEP meeting is negligible, only about 21% priced off the futures. So looking at the futures, at least, it ain't looking too good for a 2016 action. Of course, who knows? That could change if the Greece thing turns on a dime, and it's shown the potential to do just that. But as of right now, that's where the futures are looking. And speaking of looking, it's time for us to look ahead. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is indeed the portion of the program where we break down what's moving, what's shaking in the old market that we're watching, actually, for the week to come, or in this case, the weekend to come. And we are, once again, in the thick of it, not just from a Greek perspective, but also from an earnings perspective. Alcoa came a few days ago, and where Alcoa goes, the earnings season follows. So we're kind of in the teeth of it. We're coming up. Most of the names you guys love, the crazy town names, the big active retails, the Googs, the Apples, et cetera, the Facebooks and others, not really reporting until starting next week or so, and getting even to like the 15th or so seems to be one of the big active days. So we'll stay in tune for that. Of course, the financials coming out a little bit earlier. We've got also actually on the 16th for Goldman. So actually they're on that same range as well. So kicking it off in about a week or so. So a lot to pay attention to there. Meanwhile, all eyes also turned towards the land of tasty gyros. Uncle Mike, we'll start with you. I'd imagine the lion's share of your attention, particularly in the next hour or so, going to be laser focused on some tasty gyros.
Yeah, that actually would be good. Good euro is pretty tough to beat. But yeah, I think what's going on in Greece is a big part of it. But not only that, I mean, we can't forget about the nuclear talks in Iran, as well as the markets in China. So there's a lot going on. This is very much a macro market. And then the fact that the markets were flat today, while they were up then down in the U.S. stock markets, we had nearly a 2% drop in TLT. So there's a lot of crazy things going on right now, and it's a macro market.
All macro all the time. The Viceroy, wherever he is right now, is smiling as we turn our attention to the hinterlands of Maine. Mr. Rock Lobster, what about you? Some tasty gyros on the horizon for you?
Exactly.
Is there any Greek food of note in Maine?
There actually is in a town next to mine, Trattoria Athena. It is excellent.
Where are you? There you go. See, you're living the high life out there.
Yeah, we have like one token ethnic group restaurant, basically, within like a 50-mile
one
radius.
of each. So you got the one Mexican place. Yeah, that's all you need, really, right?
But they're all really good. Like there's a German restaurant in Waldoboro. It's like, but the ones that make it are really good. So, and obviously there's the Mainer Lobster Place, which there are several of.
I'd imagine there are a few of those.
There are. You basically have to drive to the end of some peninsula, and right when you think nobody would possibly live there, there's a lobster shack. It's quite nice, actually. But anyway, yes, Greece. Yeah, it's all macro stuff. What are you going to say? Greece, China, the market's looking to get past this. As Tussauds says, short-term cautious, long-term bullish. And that's what you got to do. So, keep a little dry powder in your pocket because you might be able to scoop the market at pretty low levels. And I think that's what we got.
Unless, of course, you're a diehard technician, then you're laser focused on that 117 strike in Apple. That nonsense aside, it's time for us to close out the Around the Block segments. Also, all the time we have for this episode of the Option Block. But before we go, as always, let's check in with our cohorts to see what they have cooking up. Mr. Rock Lobster, we'll start with you. When can we expect that awesome trading options in hard to borrow names webinar?
I'll bet you we'll do it this year. We will do it this year. And I'm going to say maybe October, November. But in the next July, what do we have here? This 18th, we will be doing calendar spreads. So calendar spreads, time spreads, surf on over to optionpit.com and sign up for our event. And generally, that's how we get clients. They do see our webinars. They're like, wow, you guys actually might know something. So they stick around.
Calendar spreads. You can spend the rest of the year talking calendar spreads if you wanted. There's a lot of
easily.
a lot of grist for that mill there. I think I already have the name for your hard to borrow webinar. You're always talking about getting your juice for free. Maybe the hard to borrow webinar, if you go on the selling premium angle, could be beware the juice. Or
is it ain't free?
The juice is not free, or the juice is tasty but dangerous. Something along those lines. Feel free to play with it. Workshop it. All right.
Okay.
Speaking of great names, Uncle Mike, when can we expect the Great Trading Stupids webinar coming from RCM?
Maybe next year. Probably not this year, though. So we're working on that one very, very adamantly, of course. But in terms of some things that we do have going on right now, if you are interested in working with a financial advisor and you have about at least $500 a month to contribute to such a thing, feel free to give me a call. I'm more than happy to work with people along those lines. And also, if you are looking to trade through one of our brokers, either through Interactive Brokers or through TD Ameritrade, not that we own them by any means, not yet anyway, of course, feel free to give me a call and perhaps we can work out some type of an arrangement. I am at 312-212-3531, or feel free to send me an email at mtosaw@rcmfs.com.
I just checked, and I have about 38 cents in loose change in my pockets. Does that qualify me? Can I become an RCM client as well?
Done.
All right. Great. Thank you for that. I can put it to work. To some good stuff with my 38 cents. All right, all kidding aside, give Uncle Mike a call. I know a lot of you already have, so if you haven't done so, you might want to hop on that horn. He's getting kind of busy over there. So call him up, shoot him an email before his docket fills up, and you too can benefit from all of his doing stuff on your behalf, so you don't have to, as well as, of course, those cheap commissions. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.